Hello everyone, this is Greg here, and today let's talk about Microsoft. Let's go over some of the big positions that we see that our dashboard pick up in the market. And again, today I mainly want to talk about vertical positions, iron condors, and singles as well. And just like I mentioned in the last video, these are not all the positions available in the market. These are only big positions, unique positions selected and picked out by our algorithm. So please keep that in mind when you watch the videos. Yeah, so let's begin. First of all, now Microsoft has been relatively flat this year, even dropping a little. I think there were mainly concerns on their AI investments, whether things would pay off in the end. And actually today we have an earnings report for Microsoft, and that's why the implied volatility is quite high, relatively high for Microsoft. And let's look at some of the market sentiment and positions that we can find to try to gauge which direction this ticker is heading. Let's take a quick look at the some of the accumulative contracts positions we have here. Now today we're mainly going to go through the 30-day, or rather the 23 DTE option chain, and let's look at the flow cards. Let's look at some of these activities that's happening in the market, specifically in the options market. Let's take a quick glimpse here at some of the key strikes. Yeah, so I think looking at these activities, market is certainly slightly bullish on this ticker, and later in another video we'll be going through these flow cards in more depth, and I can explain on exactly what's happening here. But in this video today, let's talk about the individual positions that are out there that our system has picked out. Okay. So before we proceed with reviewing the positions, let's see if there's anything interesting in these IV grid and support and resistance. So based on the option chain, yeah, we're seeing potential resistance in the this area, 450, 460, 500. So yeah, let's look at the positions to see where everybody stands. Now, actually, in another video, I'll be explaining what some of these grids mean, what some of these score and numbers and color coding means. But in this video, let's move forward with the positions. And again, just a reminder, these are just some of the big positions that we're seeing out there that our algorithm has picked out. It filters out the noise on purpose so we can see what some of the big players are potentially doing. And that includes institutions, of course, and some retail traders as well. And just to summarize, besides the more directional bets here or potential hedging, we also have good old-fashioned iron condors in these areas. Since implied volatility has been quite high, it would be great to some institutions would be setting up iron condors to collect the beautiful premiums, because contracts are more expensive when implied volatility is high. Actually, let me enlarge this a little bit. There. So yeah, iron condors, we'll be going through that, and also some of the single positions. I won't be going through other strategies in this video, but perhaps in later videos, in later longer videos. Okay, so let's look at the first position here. So yeah, this one right here is a huge position and likely a directional bet, or it could be a part of a bigger strategy, but I'm going to say this is directional for now. Let's continue. Yep, there's another one. Okay, so yep, this one as well. And again, these sometimes these positions can seem directional, but they might be a part of a bigger strategy. We can never know for sure. But just yeah, these, for example, this one right here, it could just be a very small portion of an institution's portfolio. And but looking at the position, the structure of this setup right here, these three, they seem directional, so a bullish bet. I think this one is yep, this one as well. Now this one is based on the structure, this one will be bearish. Yep, this one is bearish. It could be a hedging position for a much bigger long position on somebody's portfolio. So sometimes what these institutions would do is they hold huge positions on these tickers, especially on Microsoft. I mean, it's one of the biggest AI players out there, Magnificent Seven. So to when the market gets choppy, for example, right after or during or before earnings report, it's common practice for some of these firms to put a hedging position just in case if the market gets choppy. Okay, this is one of the positions we reviewed earlier. Let's see, 400. Yep. This one is bullish as well. Essentially, what this player is doing is it's betting that the ticker will be going above 390 within a month or 23 days. This one as well. Yeah, so the bigger positions, the directional positions that our system picked out here is quite bullish today. It's not usually this bullish, but and again, these are some of the bigger positions contracts our system picked out. It doesn't represent the entire market sentiment. Just trying to clear out some of the noise we see here. Yep, this is the earlier position we reviewed. Yeah, this one as well. This one is more conservative, betting that the price will not drop below will stay above 385 within a month. Again, big positions. Now, unfortunately, right now I'm not able to show the exact premium of on some of these positions. I have to get permission for that. Maybe in later videos I'll be able to show that, and that'll be interesting because not only can we see the contract size, but also the premium, and these positions are well in the millions. Yeah, huge positions. Well, yeah, maybe in later videos when we can see both the size and the premium paid for these positions, we will get a better picture. Yeah, conservative position. Now this is a bearish position, but again, it could be a hedge for a much bigger long position. We'll never know for sure, but based on the structure itself, it's bearish. So yeah, hopefully these positions are helpful. Although it doesn't we cannot draw a conclusive firm conclusion on where the market's heading, but these big positions does help us structure. It might help some of you structure your own positions. For example, if you think that if you agree that Microsoft would be on the rise for the next month, but you're not sure on how aggressive the move will be, you can place, for example, this structure right here. More conservative, give you space, breathing room, betting that the price will not drop below 385 in a month. It's still pretty close to the spot price, but relatively conservative. Yeah, okay, let's move on to the iron condors. This is interesting positions. Yeah, so iron condors are commonly placed strategy often used by firms to collect premium. Actually, this one shows 0 contracts. Now, that's probably a data delay. Yeah, we are in after hours, aftermarket right now, so sometimes the data is not properly synced. Sometimes for a few minutes, sometimes for hours, but they're usually back on track when the market opens. So bear with me on that. But yeah, let's move on. Yeah, big iron condor positions. Again, iron condors are great when great strategy when you're trying to collect premium on tickers that have high implied volatility, especially, for example, during earnings. Yep. So yeah, these positions, hopefully it might be helpful if you're trying to structure your own. Yeah, this is the same one. When you're trying to structure your own iron condor, this might be helpful to show you what some of the bigger players might be doing. Yeah, most of the times the contracts that we picked out here, they're usually from bigger players, not retail traders. So with these bigger positions out there, they usually sometimes they can form some support or resistance on its own. And if you're looking for guidance on how to set up a iron condor, this could be a guide or a reference to show you how some of the players are setting up their position. But keep in mind that these positions can be risky because higher implied volatility, of course, means the market can be volatile, can be choppy, and sometimes these positions can be breached. So just keep an eye on that and watch out for that. All right, let's move on to some of the single positions we have. Now, with the single positions, it's usually more interesting because they're more direct. Their intent is often more directional, and you can see a lot of retail trader positions here too. Sometimes you'll be seeing retail traders and institutional traders aligned, heading in the same direction, and sometimes you see them fighting against each other in a battlefield. So sometimes that could be quite interesting. Yeah, so these two are bullish, but this one right here seems like a cover call. So essentially this player or this trader here is probably holds a big long position in Microsoft, and betting that the price will not rise above 450. So he or she is collecting premium for setting up this position. Very common for institutions and very common if you hold a bigger position. You can sell contracts to collect premium. And of course, be aware that if the position does go over 450, you could be losing. You could be losing profit because essentially, if the price does go over 450, essentially it means that the profit that you're making from your long position will be capped by this covered call right here. And same with the iron condors, because of the implied volatility, they will be collecting higher premium. This one is bullish. Actually, this one might be yeah, these are huge positions, so they're probably from institutions, but you never know. Sometimes we might pick up positions like way out here, bigger volume contracts, but less in premium. Those are sometimes that they're more obvious that they're from retail traders, but today I'm not seeing that. Yep, big position here. So this one is a bearish position, or probably a hedge, part of a bigger position maybe. This one is bearish, maybe a hedge, bullish. So this one would be selling a put position here. Somebody might be first of all collecting premium, and maybe this is the price point that they want to enter the market, enter this ticker. So essentially he's either betting that the price will not drop below 370, collecting beautiful premium, or that they're prepared to enter to buy this stock when the price is at or below 370. This could be a common strategy to enter positions when you're not sure. You want to enter a position, you want to buy the stock, but you're not sure exactly if the current price is reasonable or fair. That's when you can be conservative and set up sell a put position, collecting premium, and even if it goes against you, you can just execute the trade, the option, the contract, and just buy the stock. Yeah, this one is the same story. So yeah, I think we'll end the video here. Hopefully hopefully the video is helpful, and hopefully by showing these different potential positions out there might help you on gauging the market sentiment, and hopefully it'll be helpful for you if you're trying to structure your own contract, structure your own position. But yeah, thanks for watching, and if there's anything you want to see in the future, please leave it in the comment section, and look forward to seeing you next time.